All right. Well, good morning, everybody. I'm Andrea Hernandez. I oversee all the small business initiatives for the Garland Chamber of Commerce, and I want to welcome everyone today coming and hearing from our speaker, Peter Baldwin, with Fractional CFO. He'll talk about the art of rapid response and everything that comes with that. So before I introduce our speaker, or before Laura introduces our speaker, I'm going to have Laura talk a little bit about TSB, Texas Security Bank, and they are proud partners for the Bold Speaker Series. And I'm just going to hand it over to Laura.
Okay. Well, thank you, Andrea. And as always, Texas Security Bank is proud to partner with the Garland Chamber for our Bold Speaker Series. Texas Security Bank was founded to help business owners and to help elevate the champions of free enterprise. So we set ourselves apart from other commercial banks by creating education programs for business owners and their key players. So in addition to the Bold Speaker Series, we offer our Business Speaker Series, which is a similar format, but over lunch. And then we also have our highly successful TSB Academy, which is a year-long education program that meets a couple times a month for a few hours to discuss different business disciplines. And the program is modeled after an executive MBA program. And we are currently accepting applicants for our 2022 class. So if you're interested, you can reach out to me to get more information, and you can follow us on LinkedIn, Twitter, Facebook, and Instagram. So enough about Texas Security Bank. Let me introduce today's speaker, Peter Baldwin of Your 10%. Peter is a pioneer and thought leader in the fractional CFO services industry, having spent the past 18 years upgrading operational finance and accounting departments in over 30 privately held family-owned businesses in a variety of industries, including manufacturing, distribution, professional services, and entertainment. He's the author of the Amazon bestseller, Profit Peak for Entrepreneurs, a practical field-tested guide to maximizing profit and optimizing cash flow. Prior to his CFO work, Peter was a Big Four management consultant who specialized in systems design and financial management. As Peter began to understand and meet the needs of his clients, comprising a wide variety of industries in the small to medium-sized firm market space, he gravitated towards a fractional CFO client service model that serves 5 to 8 clients concurrently. He continues to refine his proprietary Your 10% operational finance methodology with these companies. Peter received a finance degree from Brigham Young University and an MBA from the University of Oregon. He's a frequent presenter at industry associations seeking his strategic finance and enterprise leadership expertise. So with that, Peter, the floor is yours.
All right. Well, first of all, thank you, all of you, for attending today and for inviting me to present. So I've, over the years, got to know the folks at Texas Security Bank. Originally, they referred some clients that were in the design district, and some of those actually ended up as profile cases, although they were obscured. I keep everything confidential. But they actually ended up in my book as examples of some of the do's and don'ts of business owners. So I've had a long relationship with Texas Security Bank, and I appreciate this opportunity. And also Garland. I've been in the kingdom of Garland on several clients, pretty self-sufficient city with property tax jurisdictions and utilities. And I had the interesting fortune of working with a metal fabricator, and they had hit some troubled times. Sometimes I wonder why I took that client, but they had 27 active litigations against them. They had issues with pretty much everybody, the IRS, the utilities, and also the property taxes. So one day, as we were trying to run our business and turn it around, one of a constable car showed up at our property there in Garland. And in another car came the city attorney for Garland. And she was determined that she was going to send us a message because we weren't paying them fast enough. And so we really didn't have anything that we could give at that time. So she said, well, let me take your company Suburban. And so before we knew it, she had our company Suburban. They drove it off and they compounded the vehicle. So not long after that, a couple of weeks later, we finally had the money so we could get our vehicle out of, out of Garland. And so we paid for our vehicle, but then they couldn't find it because apparently we were the test case for sending a message to business owners. So I've had a lot of fun experiences. You know, that one I'm going to remember forever because it was just hilarious. But we did get our vehicle back, and all is good. You know, some companies are doing better than others, and that was a rough spot. And a lot of times, you know, there's just rough patches that we find ourselves that we can get into, and hopefully nobody's in that situation. But we've had some really rough stuff lately. I'm going to go to my PowerPoint just so we can focus on that a little bit. And there's a few videos, so I'm going to test the first one when we get to it. And hopefully we will be able to hear the sound. All right, stand by. Okay, so that was a nice introduction. Thank you. The couple of things I just want to emphasize is that I'd finally heard enough stories and had enough experience that I just had to write this stuff down. And so I did write it down in the book. And thank you for mentioning that. And then recently I worked on a TV show podcast project of the same name called Profit Peak for Entrepreneurs. And this, although I'm a financial person, this was not so much targeted towards finance. It was more targeted to the everyday entrepreneur and the issues that they face, the triumphs and everything that goes with that. So I'd like to just show an introduction to this show, if I might. It is available. The first of 7 episodes is available from my website or YouTube. And just, this is a 1-minute introduction I'd like us to watch. And if for some reason we cannot hear the volume, will you please let me know?
In today's free enterprise system, 2 unforgiving truths prevail. The big eat the small, and the quick outmaneuver the slow. My name is Peter Baldwin, author of the Amazon bestseller, Profit Peak for Entrepreneurs. My passion is helping everyday entrepreneurs grow their companies from inconsequential to extraordinary. Whether I'm in the boardroom, the conference room, or the war room, I am always working shoulder to shoulder with many great entrepreneurs. In this show, we interview successful entrepreneurs, learn from business thought leaders, and pay attention to current events and trends and how they impact our businesses. Join us as we demonstrate that the American dream is still alive and well to those courageous enough to take the journey. This is Profit Peak for Entrepreneurs.
So that's my little project that I've been working on, and it's been a lot of fun because I've been able to interview entrepreneur teams, mostly across the Metroplex, but I've had a few visitors fly into town to do that in person, believe it or not, in-person interviews. And what's interesting is in 7 episodes, I've interviewed 10 entrepreneur teams. A lot of times it's a husband and wife ownership team of a fairly large enterprise. And out of those 10, 2 of them are really, really struggling. And when you watch the program, you're not going to actually probably pick that up because, you know, some things have happened. But, you know, when 2 out of 10 businesses essentially have shut their doors, and, you know, there's probably that stat really across, you know, all kinds of different industries. Some industries have been hit more than others. this really hits home because this is our life's work, our life savings. And, and for something to happen to our business can be devastating, not only for the ownership team, but for all the team members who rely on, the going concern of that business. And as I thought about, what we could spend a few minutes on today, I really think it's important that this idea of agility be implemented with respect to financial management. And definitely you can't do it without your people. And unfortunately, my experience has shown me that there are a lot of poorly equipped companies with just really the wrong financial staff. And once you have that, then maybe you can establish what are my baselines. So when I get out of scope of what should be happening with the business, then I'll recognize some trigger points, make some decisions. And hopefully I've got some ongoing financial engineering mechanisms going that, just help me to be a better, more responsible, more profitable business. And once we've done all that, assuming you're in the business of profit, but maybe there's some other motivation, how do we protect what you've accumulated? And that's really what I wanted to share. So with respect to agility, I thought of this not long ago when I was with my family. We were at La Jolla Beach in the San Diego area and just kind of playing on the beach. And that one, unlike some other beaches, is not very smooth. The landscape, it just comes up quickly, so the waves can come crashing in and they can actually surprise you. And my children, who are all teenagers now, were just having some fun, running up to the waves and back and that kind of thing. And then my daughter, who at that time, was 15, she turned her back to the ocean. And before we knew it, this surprise wave came and smacked her and knocked her down. Fortunately, she did not get dragged into the ocean. So it's not that horrible of a story, but it was a lesson that we don't want to turn our back on the ocean. And this COVID-19 wave or waves that have hit us is just like that. We can't really turn our back on it. And the first thing that we had to do was do some preparatory items in advance. But as these waves started coming in, and I wanted to mention a few of the waves, we had to have our response strategies. So of course, the first wave was the initial impact that came of all of a sudden, from one day to the next, we have a pandemic and government mandated shutdowns, limited business. We just can't run things the way we used to. And the adversity from a financial perspective is I'm probably not earning the revenue that I was, and there's a mismatch between my income and my expenses. So wave number one hits, and then we're thinking, okay, well, maybe I can survive this. My goal is I'm protecting my balance sheet. Let's not let my income statement trickle losses and weaken my balance sheet. But then it just stretched on. We've gone a year into this with varying levels of ability to conduct business. When I travel in the Metroplex, I think like all of you, there's a lot of cars out now. So I think things are humming a lot better than they were. But if we did not make systemic changes to how we run our businesses, then we've essentially been weakened by another wave. And then the final one is, let's say that our balance sheet has suffered a bit. Maybe we've used more cash than we should have. Maybe our receivables are lower than historically. Well, the problem is that when business is good again, we have to build that up. And, we have to invest in inventory. And to do that requires cash. And so that's really another wave where our growth is inhibited if we're weaker coming out of this than we were initially. So these waves of adversity apply to all of us in all aspects, not just COVID-19. It was a great example. So this is Dave and Darian Reichert of Davis Hahn Lumber. They are, Dave and Darian own a 100-year-old business almost. They haven't had it for 100 years. He pointed that out. But I want you to listen to him as they talk about how they navigated the pandemic.
This year particularly or the last 10 or so months has had an additional challenge of COVID-19. How has your business been impacted by this pandemic?
Not as we would have anticipated. I mean, at the end of March, we were ready to shut down in a sense of, everybody was in a panic mode for the most part. And so sawmills kind of went into maintenance mode, stopped producing. We started, looking at different scenarios as far as, okay, what if our revenue's off 25%? What if it's off 50%? What are the moves that we've got to make? And so we anticipated being off 25% and made some moves immediately. However, what happened is once everybody got home, they started looking at their homes differently. And so they started looking at those delayed remodels. They started looking at backyard projects. And then the builders were deemed essential. And so they were able to continue to go. And so we've been kind of off to the races, particularly the lumber pricing got out of whack. And so it's been challenging in ways that we did not anticipate.
Okay, so you're making it, and the construction industry itself is doing fairly well right now.
All right. So just an example of many interesting impacts. And everybody's story is a little bit different, but of course there's a lot of commonalities. We're all making it. We're trying to survive, and and some are even thriving through this. So good for them. Good for entrepreneurs who are trying their best to to do great things. Okay. So I mentioned protecting the balance sheet from income statement losses. And just to hit home with that, all right, I've shown here a very summarized income statement. And here's some declining revenue scenarios. And let's say that this one here, the first column is the normal scenario. And I just made this monthly revenue of $2.5 million with a gross profit percent of 35%. So that gives us a gross profit of $875,000. Well, normally we're able to cover our fixed cost or our operating expenses and have a tidy 5% profit, which is nice. Well, this can start going the wrong direction quickly if we just let things slide. And so in the instance of a 20% decline in revenue, then we're already looking at our gross profit of $700,000 does not offset operating expenses if we kept them the same. And it just continues to spiral down. If revenue was down 30 or 50% or worse, it just gets really bad. We are in a position where we could be losing substantial money on a monthly basis. So the argument for agility and understanding what's going on, is really hits home in this type of environment. It doesn't just hurt on the income statement. The accounts receivable, of course, shows up on the balance sheet, which is a statement, let me go back, which is a statement of our net worth. Do we have more assets than liabilities? And in this case, I just wanted to show that during a certain time period last year, that our receivables started creeping out. Like there was really nothing overdue in this last column. But as you can see, 2 months later, and this is actually a real example, there was, $100,000 creeping out. And so what was happening was we were losing out on some working capital because our receivables, was starting to absorb that. And there were some other dynamics with this, of course, because with less sales, you'll have less receivables and it just starts shrinking. But a lot of things can happen. It's just not on the income statement. So this concept of agile financial management has to start with your people. And the way that I like to explain this is that it's not people of themselves, they are performing a function or purpose within financial management. And the first objective of a finance and accounting department, well, there's three objectives. Number one is comply with all of the city, state, federal obligations. Number two is let's keep the transactions flowing so that our bills are paid and we're collecting money. We've got cash flow. But really the third one is to collect information. And this one is forgotten by a lot of small to medium-sized businesses, and which makes it really attractive for somebody like me to go and work with them, because this is just kind of what I think about all the time. But the purpose is to develop an information layer, to collect information so that we can develop predictive capability, analytics and metrics and cash and profit predictions. And we take all of those analytics and we send them upstairs to our stakeholders and we manage them. So of course, Texas Security Bank would be, a very important stakeholder for many businesses, or just really an example like that, because they need some sense of what's going on in our business. And in order for us to have that line of credit or be in compliance with other loan covenants or what have you, we really need to get their cooperation. And so with the bank or with the supply chain, even with employees who want to know they're working for a going concern, we don't have to give the same financial information to everyone, but we want to have some level of financial information available so that we can feed and gain the cooperation of our various stakeholders. The way we do this, I want you to see that these concepts are put here on this triangle. So this is the world of finance and accounting. On the left is where the CPA firm lives. They're not on the right on operational finance and accounting. First mistake a lot of companies make is they think their CPA is looking out for them, when in many cases they are just helping them comply, to the IRS or whatever. Second mistake companies make is they have a controller or bookkeeper and they assume that person is strategic. They're really not. They don't develop any predictive analytics. They just don't. And the ability for that company to respond to an adverse event or to gain what they want in a growth scenario from a stakeholder is impaired because they have not really spent the time or the investment on developing predictive capability. But one other thing that many companies are missing, they don't have an ability to put their systems, their people, processes, technology together. They really, they're doing things the same way they've always done them. They're not considering, outsourcing. They're not considering automating. they're not paying attention to new workflows. And of course, this happens all over the business, but it also happens within finance and accounting. And if you're not redesigning your business, if you're not being strategic, then you're left with these two small triangles, and it doesn't work very well. I've seen it broken in a lot of cases. And so the first key to being agile is to make sure we have those areas fixed. Now let's talk about baselines. So this is a really nice car. I unfortunately don't own it, but I wish I did. I have other nice cars, not this nice. And this particular car is just beautiful. But of course, let's focus on the cockpit and some controls. And what I've done in this Aston Martin is I put some pretend controls just for fun. So let's make sure that we know about our net income, that we know our liquidity, that we know our solvency, and we know where our break even is. And if we've established those basic financial measures and we just know what they are, then if they start changing or going in the wrong direction, then we will recognize that and we will respond accordingly. So just for the sake of putting these down, I'm sure many of you, just know all about these. So I'm not expecting this to be groundbreaking, information to you. Just I do stress it because I'm the financial person. We definitely want to understand what our income statement can generate, and we want to know that for several reasons. But later we'll talk about financial engineering, and we can't really improve unless we've established some baselines. And just to flow down here to the other side, let's make sure that when the waves of adversity come, we really know where our break even is. So let's say that we're a $10 million company, and our gross profit is 30% gross margin. Then that says our fixed cost is $3 million. So no matter what I do, unless of course I make a change, but we're assuming I don't, I always have to have enough revenue to pay for that $3 million. And if my revenue goes below 10 million, then I've got a problem because I'm below break even and I've just got to figure it out. So we want to make sure we have that in our cockpit. And then we're going to go here on the left and the right to our balance sheet. Our balance sheet tells us our health. Does our engine have oil in it and fuel or whatever? Just something about it that will remind us that that our vehicle is running well. And so the way we do that is with our some of our liquidity measures. We want to know that our receivables and our inventory and our cash are greater than our accounts payable and our credit cards and any current notes receivable, maybe even lines of credit. And so this can be phrased in a couple of different ways. One can be greater than the other, or we can turn it into a ratio. So there is no correct ratio here other than what does the industry say that companies like yours can do. A lot of people who teach this say you at least need as many current assets as current liabilities. So you want at least a 1-to-1 ratio. But you know what, if you're 10-to-1, good for you. Just figure out what you are, what your industry is, and figure out how to improve it. And then here on the right, we want to have a sense of the portion of debt that goes into our net worth. And we want to minimize that. Definitely, if this is a ratio, we want less debt than equity. So that shows that our assets have some value on that business. One other point I like to make about these metrics is you can have really, really good metrics, but at some point, you'll probably optimize that. You'll probably say, I just have, so much cash in the company, I want to do something else with it. And you'll say, okay, so what happens if I take the cash, I dividend it out, which it's a reduction in equity, it's a reduction in cash. The only point is just pay attention to your ratios to see, what the end result is if you do that. There's no wrong answer. You don't need to keep everything in your company like it's a big, savings account of everything you could ever accumulate. You just want to make sure you have the right amount. And if you're planning on growing, you can accommodate that. And of course, financial metrics are just, one side, but they're probably lagging indicators. And there's the sense of, what are some leading indicators and activities that really drive the business. Some of these efficiency metrics I put on here, like payroll and things, that's one way to go. Payroll's important to most companies. Other items just may have something that's taken a financial metric, and maybe it's number of widgets or number of customers. There's something in the denominator that that makes it more leading, that if we perform more of these behaviors, then we will generate better results for a company. So another idea of some custom metrics, to put in your cockpit. Now, the concept of trigger points in decision making. So the goal is, let's protect or let's optimize our cash position. And when we're in the crisis scenario, we first focus on our large accounts because they really make all the difference. And we can go small, but we don't have a lot of time up front. We're trying to make the biggest difference with the changes that we make. And so we're doing several things. We're preserving our days sales outstanding, our accounts receivable. We're trying to keep it from slipping. We are, we're not a bank. And so the moment our receivable slips, we might slow our payables in a commensurate fashion just to keep tabs with what's going on. That's my opinion. You don't have to do that, but I just really think that there's a difference between a manufacturer and a distributor and a bank. And so I wish to point that out. And then, of course, if there's any negotiations that can be had with respect to the payments you're making, then you want to take care of that as soon as possible. So Lewis Carroll, it takes all the running you can do to keep in the same place. And that's really true when these waves are hitting us, that we've got to do some things just so that we don't lose ground. So what we do is we put ourselves in a position where we model our business, and we do this in advance of a crisis scenario, in advance of company growth, so that we can start inputting assumptions. What happens when my revenue increases by 25% if I take on this new line of business? Or conversely, what happens if I lose 25%? And I need to understand how my expenditures relate to that. How can I modify them? And I need to have that plan ahead of time. This is not an on-the-fly event. I'm not saying be completely specific, but in general, know what are the areas that you need to modify and who you need to talk to. So failure to make any changes during a stressful event can damage the business. And the problem with damaging a business is when you start harming your balance sheet, it takes a whole lot longer to catch up because it's easy to keep on top of things and make the changes immediately. If you're just kind of a little bit slow and maybe we'll get through this, then a damaged balance sheet is going to take you twice as long or more to catch up, as opposed to if you just made the changes to begin with. So when you hit those trigger points that come out, what happens if my revenue declines by 10%? Then you're ready to go. You know who to talk to. You remember my goal is to keep my balance sheet healthy, and you know what actions you need to take. So here's a few techniques that I use with my companies. This developed over the years, and so we hit a stride with many clients where we have a process that we like together, and so I just kind of formalized and wrote about it. But get yourself a financial modeling tool. This assumes that your business is complex enough that you just can't run it in your head, or the president can't do it by himself or herself. But there's a lot of moving parts that you have other people there with you, and there's some complexity. And anytime we have that added complexity, we need to perform behaviors that loop people in. So the financial way of looping people in the first place is make sure our executive team is on board. So this gold column here is an actual P&L performance, and it just kind of flows down from revenue to some cost of goods sold to our operating expenses. And on the left, we have a forecast, which, depending on how you're doing this, you may have an annual budget plus a moving forecast, just kind of a frame. How are we doing compared to how we thought we were going to do? Then maybe we'll take a look at that same time period for last year, and then we'll be able to run comparisons. And if we get some reds, we'll look at that and we'll think, for instance, payroll last year was $170,000, and this year's $200,000. Why is it more? And it's even a little bit more than what we budgeted for. So what we're trying to do is come up with our 3 to 5 challenges that we want to spend management effort on each month, and just work on those. The next month might roll around and we might have some of the same challenges, or we might add different ones. But if we're going through a process where we can determine for ourselves what's going on, then it's very helpful. So what I recommend for every business with complexity, multi-location, lots of customers, every manufacturer distributor should do this, and there's a lot of other companies that should too, is just take this seriously so that you can develop the competency in this area. And if you get a variance, it may not actually be something's wrong with the system. You may smoke out bad accounting. There is a lot of bad accounting in these small to medium-sized businesses. It's in my book, I talk about a lot of that, about just how that makes it difficult for the executive team to manage, but you want to smoke all of that out as best you can. Okay, so I have put down some financial ideas, and I'm going to summarize a couple of concepts because I think we advertised we were going, until whatever 8:45 and doing some questions. So I'm going to summarize a few things. So the idea of engineering your business on an ongoing basis. So we're always, as Confucius says, we're carrying away small stones because we want to make a big difference. We're moving a mountain. And the way that I phrase this is there's 3 10% success principles. The first is target a 10% profit improvement. And by that, I want us to think about our income statement. And I want us to divide it into 3 sections: the revenue section, the cost of goods sold section, and the fixed expense or also operating expense section. If we have designed our income statement appropriately, then most of our variable costs are going to fall in our cost of goods sold. And so we're going to have 3 sections: revenue, COGS, and operating expenses to engineer. And what we're going to do is we are going to work on each of those 3 areas. We're going to say, well, let's increase my my revenue by 2.5% on a business that has a 40% gross margin. Well, the way the numbers work is you actually can generate a 10% improvement to your bottom line profit just by doing that. And if you work on all of the 3 areas of the business, then you're more than a 10% profit improvement. And the idea is that by continually working on these different areas, you not only improve by 10%, but you can double your existing profit. You can do a lot of wonderful things. I've got a video that is on my website. If you want to watch it, it goes through this in more detail. And then the next concept is work within the 10% threshold. So that means that company that's losing money, that's losing, for every $10 sold, it's losing $1. It's losing 10%. That's not, your 20% profit company, at least not now. Just focus on a loss company. Just get the thing to break even. That's it. Don't try and go more than 10 percentage points. It just doesn't work. And in many cases, the company that is losing money needs more than financial help anyway. It's going to need some other type of surgery. It's going to need a change to its business model, a renegotiation with stakeholders. There's a lot of things that would have to happen. And the final concept is do more with 10% less. So you can have less people working for you. You can pay them more and you'll still come out ahead because they're going to do a lot more. You can have less office supplies, or you can use better technology that improves on a workflow. There's a lot of things that you can do as a business that will certainly help you, to be more efficient and more lean. So there's a story from the battlefields of northern Mongolia so it was the time of Genghis Khan, and he was consolidating all of the tribes of the Gobi Desert. And one of their competitors in the area was the Kate army of the Chinese. And that army had 250,000 people, very well-trained, great army. And at this time, Genghis Khan had sent an elite attack force called the Mangade to go and put a stop to the Chinese army that was getting ready to invade the Mongolia region. And the difference between these armies was this smaller army, the Mangade, was, there were only a couple thousand of them versus 250,000 of the Kate army, but they were trained in a way that they were much more battle hardened. When they would train for days on end, fasting. When they were in the battle and they were doused with flames, they would keep advancing forward. And so if you read the story in my book, you'll find out that it was, a miraculous, or an unbelievable experience how this small army defeated a much larger army. And their leader, by the name of Yasate, was known to say, "You do not need more generals, but when the hour of crisis comes, remember that 40 selected men can shake a world." And that's really true for our businesses, men, women. We don't need to add people. We need to rethink our workflow. And certainly, if those people are essential to the growth of our company, certainly we want to add them, of course. But in a lot of aspects, we don't need, to just bring people in, if there's other ways of doing it. And the final concept comes from a different region of the world. This one is northern Poland, or back in the 1200s, it was Prussia before it became Poland. There was a very formidable holy order, military and religious order, the Teutonic Knights. And they were either really great friends to you, or they were really horrible enemies. And one of the structures that they built was a castle called Malbork. And Malbork is a very impressive structure because it's a series of, there's actually 3 castles in it. It's one of the largest castles in the world. There's the upper castle, the middle castle, and the outer castle. And this picture maybe doesn't do it justice. That's my daughter on the right. She was in Poland for a couple of years, and so she told me about this castle. And to get into Malbork, there was a series of dry moats, wet moats, different towers, walled structures, and controlled, secure checkpoints. And it was very difficult to breach the defenses. And even if you were an invading army, to get in meant you only got a little way, and then you were repelled and destroyed because you really couldn't get into the castle. And so for many years, Malbork fended off, many invasions just because of the well-trained crew and this fortress that they had built. And so I just like to point out that one of your greatest possessions is your business, which is your fortress. And your fortress, just like Malbork, needs to have protective mechanisms to protect the things that are most precious to you, which include your cash, your data, and I should say, instead of customers, your relationships, because this could be your employees as well, or somebody else. And then also your business. We need to take these same concepts of how this ancient fortress of Malbork was defended, and we need to apply that to how we protect our cash, how we prevent our data from being stolen, how we keep our people from being poached away by a rival sovereign, and how we protect our business from inside assault from a rebellion or from an outside assault, which sometimes they come stealthily. We don't really know about them. And more of this is in my book. I guess I try and think I can do this in the time I had, but I just really defer you to that because it's some great applications we can make in those areas. So in summary, let's be agile. let's get the people that can really help us. And some of that includes finance and accounting. Let's make sure we understand our baselines. We need to know when to respond with our decision making. Let's have some ongoing financial engineering principles put into our business. And then since we've worked so hard, why don't we protect it as well? So I appreciate all of you for listening today. And just so you know, if you would like to connect with me on LinkedIn, I'd love to do that. If you want to see the Profit Peak for Entrepreneurs episode and show that has come out, then my website it's listed here someplace. It's this y10p.com. Love to share it with you. I love entrepreneurs, and I really think that we're in a wonderful area. We employ businesses like ours employ half the country. We provide many of the innovative insights and technologies that get brought mainstream. They come from companies like ours. When the problems happen, winter storms come, there's businesses like the Hermans, are there in Garland with their Kim Dry and Delta Restoration businesses, that they're the ones solving the problems. So I really appreciate small to medium-sized business owners, and always love to network and share and swap stories with all of you. So thank you for being here with me today.
Thank you, Peter, so much. Thank you, everybody, for coming today, this morning. We are getting really close to our time frame, but if anybody has any questions, please submit them in the chat feature. I can also send them to Peter, and he can contact you to answer any questions that you have. And like he said, he has, I'll also send the information to connect with him on LinkedIn, and that way you can ask more questions about today's presentation. Today's presentation is also recorded, so you will receive an email from me later today with that information, so that if you need to reference today's event, you are welcome to do so. Just a few reminders from the Chamber. If you're interested in networking, we have the Chamber's most popular event, Direct Connect, this Thursday from 7:30 to 9 a.m. And then also the Garland Chamber is hosting the second legislative briefing on March 31st, that's next week, from 7:30 to 9 a.m. The Commissioner of Education is going to share more on the education priorities and what actions they're currently taking in the legislative session. Again, thank you to our speaker, Peter Baldwin. Thank you so much for being our speaker this morning. Thank you to our partners, Texas Security Bank, and thank you all for joining us this morning. This concludes our event. Have a great day, everyone.